been an interesting several weeks, man, and it's there's some divided indexes as we've been seeing a lot. Big differences in indexes more recently. Let's move to the next slide. S&P 500 is not very healthy right now. Only 29% of S&P 500 stocks are outperforming the index. That's the lowest since '99. NASDAQ, on the other hand, 13-month highs. 13-month highs. So very big differences right there alone. And we're not even going to talk about the Russell, which has been sick, of course, over the last couple of weeks. Dollars rallied 9 out of the last 11 days. Tom and I were talking about this at the big boy table the other day. It's the highest since it was in March. Third consecutive week of gains in the dollar. And the 2s and 10s curve broke the 221-day inversion streak from the year 2000. Now the 1980 streak is the longest streak. This streak is second currently. And we're also the most inverted in that 2s-10 spread since SVB. It's about 68 basis points, somewhere around there. Now, this is interesting. VVIX is back over 100. Skew has been powering higher, which usually does when markets are going higher, but we haven't. I mean, NASDAQ's gone higher, but that's about it. The S&P 500 is, in a rut, right? And then VIX is just sitting around the long-term average. I mean, what do you make of all this in the volatility complex right now, guys?
Well, for me, it's kind of weird that the VVIX, like
well, that's why you're playing a reverse.
No, I understand, and I find it kind of weird because I feel like the VVIX has been totally disconnected from the VIX itself, from actually the spot VIX for like a year. Like it used to be, when volatility on volatility would go higher, you would see volatility go higher. Now what we see is kind of the weirdest thing. When volatility on volatility goes higher, the volatility actually goes lower. And I just don't even get it. So I don't even know. I don't know what kind of, I don't know what that index means anymore.
Do you think that people are playing VIX options in a way such that they think something's going to happen in the market, but that thing is actually not happening? Could that partly be why?
I mean, it could be, but I just don't think people play. I don't think there's anybody left in, when over the first couple of decades of either trading VIX or trading, indexes, I think people would buy protection. I think protection is, and we've been talking about this for a long time, but I think the concept of protection is so ridiculous. Like, who's going to buy 100% volatility to protect a 20%, index? Like, there's no math model that works for it. So I just don't get why anybody would buy volatility or buy protection, because it's just too damn expensive. It's like, people don't realize just because products are leveraged doesn't mean you're not paying a ridiculous amount for protection. Like, if you want to protect something, just get out or use an underlying, but you can't really buy leverage against it. It's just too expensive.
I know it's interesting because, like, for a long time, right? I mean, 15, 20 plus years ago, that was a lot of what people like us talked about, the idea of buying protection, right? Again, an index or buying puts or whatever for it to help you sleep at night. And
yeah, but that was the whole put call ratio and everything else. That doesn't exist anymore.
Yeah, it's just interesting. You make a good point. I mean, the idea that, why buy protection? By and large, if there is a down move, it doesn't last very long for the most part.
Oh, easy there.
Well,
I mean, most of us wouldn't buy insurance. Most of us wouldn't buy insurance if we didn't have to. And
I was about to go there too.
And I don't think it makes any sense to buy protection in the stock market, even though it's priced more efficiently than protection somewhere else. I still don't think it's worth buying. I don't buy AppleCare.
So mark it down, people. Right now, go get rid of your Geico and your Progressive, all of it.
Well, legally,
your car, your house.
You have to have.
I know. I said that.
Nah, you make a good point, and I think that's kind of what we're seeing here. It seems as though that people are. It seems as though the market might be coming around to that. I don't know. We'll see. It's interesting though to see these measures the way they look right now. Let's move ahead to the next slide. The chart you love to see, the AI sweepstakes. Man, oh man. Nvidia, ticker AI, which has been higher. But I mean, obviously, Nvidia is the star here. Do you know on Thursday, Nvidia had the largest single day market cap gain for any stock in U.S. equity market history. Huge move. I think it was pricing maybe a $25 to $30 move on earnings yesterday, and is solid. What I don't know, according to TP, like 7 standard deviations, damn near. Big move yesterday on earnings.
Yeah, that hurt.
Yeah, AMD was moving along strongly with it too. Google was carried a little bit, so was Microsoft. It's fascinating, and Tony and I were talking about this. This is clearly momentum right now. Nothing other than that, and I'm almost surprised that volatility isn't a little bit higher in Nvidia after even a big move like that. Just a little bit. It picked up some yesterday, but I almost expected it to be a little bit higher because that move was insane. Let's move to the next slide. All right. This is the one. This is the one I was telling you about. All right. This is it.
Jamal warned me about this one yesterday. Go ahead.
The last time the NASDAQ...
My mom warned me about this trade. Yeah, exactly.
The last time the NASDAQ 100 was high relative to small caps was the dot-com bubble. Now, I know that you've been on this thing for a while, but here, if you're looking for an inflection point, this is it. It's the ratio of IWM to NASDAQ, or, Qs or whatever. It's below the lines that touch the pandemic time period. And specifically, if you remember, September of the pandemic, September of 2020, we reached kind of a crescendo with tech stocks. I mean, they were just completely through the roof at that time. Tesla was leading the way. That's where the line is touching. And then it touches the 2000 time period, .com. After that, IWM kind of led the roost and took over. So is it time, or is this nothing?
It's time.
After yesterday, it's time.
Yes.
Okay. So I think it might.
I mean, it's time. It's not a guarantee, but it's time.
It's not a guarantee, nothing at all, for sure not. Again, I've been one of the main people that have been a proponent of long NASDAQ, because I feel that obviously NASDAQ has been controlled by rates, and rates should be pulling back at some point more than anything over the next year. But who knows? But we'll see. And I think that's the decider. If rates for some reason don't pull back, we have to go higher to 6% or something. That would be the difference on this trade. Let's move to the next slide. Speaking of rates, Treasury yields have bounced back quite a bit over the past couple of weeks. We've seen somewhat of a bounce. And I've also noticed the margin between the 10-year and the 30-year have started to widen. 30 years starting to outperform. I mean, these things were in lockstep for a little while there, but 30-year seems to be performing 10-year more recently. What do you think about that? Mean anything or not?
I don't. I don't know. They've been. I feel like they've been in lockstep. I think what's really interesting is how oversold I think the bonds are here. It's one of my biggest positions right now is on long bonds, but I'm short, just short puts in there. But I'm surprised by.
I'm glad you say that. Move to the next slide, John, as he's talking. Bam! IEF, 7 to 10-year bond ETF. Look at the difference now between that and tech stocks. Tech stocks have actually, remember when tech stocks used to move down with bonds? Not happening anymore.
Yeah, that's why this whole thing is screwy to me. That's why, I mean,
Markets move, Sosnoff. Markets move.
I know I'm early. I got it. I'm going to I've been adding some short bond puts to my position every single day. I've been selling the 122 puts. Now they're higher than they've been all along, but I'm going to sell them a few more today. Ugh.
Why? I mean, what's up with bonds? Why can't they seem to get a bid recently?
I don't know.
I don't know neither.
I'm selling some more puts in there though, and then I didn't think they were going to get under 125, but I mean, I didn't think they were going to get under 126, and they did. So we'll see.
Ladies and gentlemen, it's rare that you see a perplexed Sosnoff, and that's what we're seeing.
No, it's pretty common. But I did just put on the Russell while you're talking. I just did the Russell NASDAQ trade, and I just sold some bond puts.
Because you showed him that stupid slide.
It's not a stupid slide. I would wanted to do it anyway, but that slide pushed me over the edge.
There you go.
Let's move to the last slide. Round it out here. The Brooklyn guy, Icon, dude. Stock has gone from $19 billion valuation to $7 billion market cap, I should say. Does this thing have a date with zero? They're saying he's too over leveraged. What do you guys?
Unbelievable that this stock is down to $21. I traded it small when it was 35-ish, I think, or whatever it was, and we took a tiny little profit, like 25 cents on a strangle, and I got out. And I'm not touching it again. It's too illiquid.
Yeah,
it's just too illiquid. Honestly, it's too illiquid.
It is. Yeah, you take the.
But I didn't think it was going to 20.
It's wild. This is interesting. Yeah, I don't know. Fed meeting minutes came out the other day. I usually don't pay attention to this, but I paid attention to this one because they were divided on whether or not they should make another move or pause. And they're truly divided. However, we got the core PCE this morning, which Fed likes to look at for inflation, and it ticked up a little bit higher. And as a result, I just noticed the CME FedWatch tool now actually pricing in more of a quarter point rate hike than it was early in the week. It was about 25% early this week. Now it's about a 58% chance of a quarter point hike. So maybe this data point just made the decision. I don't know. We'll see. Speaking of interesting things as well, Japanese yen fell to the lowest of the dollar in 6 months. Probably has a little bit to do with gold more recently, too, also falling. I mean, dollar's obviously been ripping and more recently and pushing some of these currencies lower. So that sucks. PacWest, this bank thing is still kind of in the balance here. These guys sold a $2.6 billion home construction loan portfolio, try to raise some funds. Maybe this bank will still be around, but I don't know. As me and Tony were talking the other day, sometimes the stock price lets you know a stock might be on the way out, a company might be, and that one's still pretty low. Finally, May 23rd, research, naked versus defined in 0 DTE. Check that out.
Very good. Hey, listen, Tom, let's take a quick break. We can cut this and get right to the opening bell in less than a minute. Listen, Tasty Live. Thank you, Jamal.